Welcome to One-on-One with Algo, the podcast where we dive deep with leaders on AI adoption.
I'm not sure that LLM is the architecture that we're going to stay with for 10 years, right? EQ is becoming way more important. There's a shift in distribution, right? From traditional search to LLMs. And when there's a change in distribution for consumers, there's usually major disruption. So,
Eran, welcome to One-on-One with Algo. I'm super excited to get this started. This is going to be an amazing conversation. You're a general partner at Entrée Capital and coming with a wealth of experience in finance, startups, and business. So I can't wait to dive in, but let's start with a simple question. How are you doing today?
amazing. Not bad. Sun is shining, drinking coffee. All is good.
That sounds great, Eran. Okay, are we good to go? Are you ready?
Born ready. Let's do it.
All right, let's go. First question. What's your AI investment thesis right now? Are you focused on horizontal or vertical plays?
Yeah, it's a fantastic question. So, there's horizontal, there's vertical, there is infrastructure, and there's consumer. So the short answer is we're looking at everything. The longer answer is that I think that in every one of those categories, there is potential disruption and very interesting things happening. So if you look at infrastructure, it's fairly obvious in terms of the hyperscalers and the model companies, but it's very challenging to invest there right now because of the speed of how fast things are changing. So what's relevant now in a quarter or two might be completely obsolete, which is insane, by the way. We've never seen something like this. And then at the application layer, historically, horizontal used to be bigger TAM, right? But less moats. And vertical used to have bigger moats, but smaller TAM, which leads to smaller companies. And I think that right now we're seeing actually in verticals, you can build really big plays because some of the value proposition is actually replacing full-time employees, which means that a lot of money is moving from what used to be services or payroll into software budgets, which is very interesting, which enables big companies to be built on vertical, which is very interesting for us. And on horizontal, so it's really big as it always was. So there's definitely opportunity there, but it's really tough to understand differentiation, right? So if I come across horizontal AI, which has clear differentiation, and I feel like they're onto something which is hard to replicate, that would be an interesting opportunity. In vertical, if it's a team that's founder market fit really high, so people who know exactly what they're doing in the industry that they're going after, that can be interesting. Those are the two segments I'll focus on. I'll say on consumer that theoretically there should be disruption in the consumer world as well, because there's a shift in distribution, right? From traditional search to LLMs. More and more people are using ChatGPT and Perplexity to enter the internet, do shopping, get their information. And when there's a change in distribution for consumers, there's usually major disruption. So keeping an eye out on those as well. Does that make sense? Sorry for rambling there.
Okay, so you're keeping an open mind across infrastructure, horizontal, vertical, and even the consumer space. Infrastructure is moving so fast, it's tough to invest, but horizontals and verticals still offer real opportunities. And on consumer, you're watching how people get information, like the shift from search to LLMs, which could disrupt. That's a great perspective. Now, let me ask you this. How do you spot genuine AI innovation versus AI washing in a pitch?
When you say AI washing, you mean what? Like just AI on the PowerPoint with no real AI to back it up?
Exactly. Startups that flap AI onto their deck without true innovation or proprietary technology, just buzzwords.
So, it depends on the field that the startup is in and like what's the most important part of that startup. So some startups need that tech innovation. So the AI needs to be really deep because that is core to what they're trying to do. Whereas some startups are leveraging existing AI to do something else, to get an application done, a workflow done. So I think we can be more forgiving on the companies that you overuse AI, maybe when it's a means to an end, and the main innovation is probably around something else, either it's a product or go to market. If it's a very technical team trying to solve a technical problem in AI, then we'll hold them way more accountable to actually, show us that they know what they're talking about. And then lastly, I think that like anything in life, it's all about preferences. So when a company says that they're going to do something, so and so in AI, usually when you reference the founders and especially the technical team, you can quickly, ascertain, are they for real? Do they know what they're talking about? Can they build it? Or they just, said to ChatGPT, make me an awesome PowerPoint to raise my seed round. So I wouldn't say that's a very tough challenge after doing this for 10 years. You can spot that fairly easily.
Okay, so let me get this straight. It depends on the startup's focus and where AI's fits within their overall product. If AI is core, you expect strong technical chops and innovation, but if it's a tool, you're fine if value comes elsewhere. You also lean on references and your experience to quickly spot who's real and who's just using AI buzzwords. This makes perfect sense, Eran, and that ties right into the bigger picture you're looking at in your investments. So with that in mind, how do U.S. tech tariffs play into your overall global AI investment strategy?
So it's very hard to answer that because it's unclear what the US tariffs are at this point in time, right? So it started with like this big announcement that sent the stock market crashing. Then it sort of evolved into sporadic trade agreements, right, with various countries, most recently with the EU. So it seems like this is going to get worked out in the form of a deal with the vast majority of countries. And then there's going to be an additional tariff, right, a tax on certain countries exporting to the US or, whatever it is that eventually is going to be in those trade agreements. But I think that it affects mostly physical goods and hardware companies, and we're primarily software investors. So the companies that we do have that have hardware that's being manufactured in China or EU or whatnot and exporting to the US, yeah, there's going to be an additional cost, and that's just the cost of doing business. Will you be able to roll it out to roll that cost onto your customer? Perhaps if you have buying power, but for an early stage startup, I don't necessarily think that another 10 or 15% in price or in your COGS is what's going to make or break the company. I think that's more dangerous for later stage companies and big companies that have lower margins or lower growth rates, and then such a spike can really damage their profitability. The angle that could, however, be problematic for startups is how much money you're hemorrhaging and what decision do I make now. So if I was about to start my factory in Bangladesh or wherever it was versus America because it's cheaper, and now I'm doing the math, and because of the tariff, I think that it might be cheaper to build a factory in the US, then companies might change decisions on where they're going to produce these goods in order to optimize for their profitability, obviously. But I can say that to me as an early stage investor, the tariffs have completely changed how I view the world or what kind of investments to make, but rather just understanding that the founders have that in mind. So when they're building and when they're planning what are they going to do, they take that into consideration. And with countries that we don't have a trade agreement with yet, that's harder, right? Because you need to sort of take a risk on the future because you don't know what's going to happen. But that's what startups are about. So we're not really too concerned with that in the grand scheme of things.
Okay, so tariffs mostly hit hardware, which isn't your main focus since you're primarily investing in software companies. And for hardware startups, they're just another factor to manage. but they hurt large, low-margin companies much more. So overall, tariffs haven't really shifted your strategy, but they still shape how founders should plan. All right, let's shift gears with this. What should kids study today to be ready for AI-driven jobs in the future?
It's an interesting question. I think that the most important thing is actually not what to study, but what to be good at and what to understand. And I think that EQ is becoming way and way more important. People skills is going to be the most important skill, I believe, because a lot of the other skills, the analytics skills, the writing skills, the content, like a lot of it's getting done by AI today. So I think that people skills and negotiating and persuading people to do what it is that you want them to do, like those are soft skills. They're going to be very, very, very important in the future, even more so than in the past. But when it comes to actually choosing like a degree, I think that computer science, math, physics, coupled with business management or economics, are great as a basis to understanding the world. I think that AI is spectacular, but if you understand it better, you have an advantage. You can use it better. So I definitely still think that having a good base and eventually a degree, what to study, right? It's just the basis. Like you don't necessarily, if you study computer science, doesn't mean you're going to be a software engineer for 40 years. But I think that getting that background is still going to be very important, and even more so because if you understand the basics of computers, math, physics, AI, that's probably going to help you with anything you'll have to do moving forward.
So what I'm hearing is technical knowledge like computer science, math, and physics is still a strong foundation. But in an AI-driven world, people skills, EQ, and persuasion are becoming the real differentiators for success. Soft skills matter more as AI takes over tasks, but understanding tech fundamentals still offers a serious advantage. That's a great insight. Knowing both people skills and tech fundamentals sets kids up for any path they choose. And my last question, what's the biggest AI opportunity you think is flying under the radar right now?
I don't know. Maybe like what comes after LLM. I'm not sure that LLM is the architecture that we're going to stay with for 10 years, right?
Okay, so you're thinking the next big opportunity might come from whatever follows large language models in AI development.
Yeah, I wouldn't say I completely back it up, but that's definitely one hypothesis.
You're not convinced LLMs will dominate for the next decade, and the breakthrough could be something entirely new. Staying open to those paradigm shifts is critical if you want to catch the next wave before it's obvious. This makes perfect sense, and it's exactly the kind of thinking that keeps you ahead of the market. Eran, as we wrap up, thanks for sharing your time and these valuable insights today.
My pleasure. Thanks for having me, Algo.
Thanks again, Eran. I know our listeners are going to get a ton of values from our conversation.
Likewise. Cheers, man.